Hello, everybody. So today I just wanted to cover some financials on PayPal. So just going straight into it. If we look at the income statement, we can see that we've increased revenue, and you can also see we increased cost of revenue, which is reasonable since our revenue increased. And if we just skip all the way down here, earnings before income tax, this is where you kind of see the problem. Now you see in 2020 we made quite a bit more, about a billion more. So yeah, we made about a billion more in 2020. If you're looking here in 2021, where definitely this number is falling, so that's not a good sign, and I think that's probably a lot of the reason why PayPal is selling off. Keep in mind, I don't really follow PayPal. I don't really own any shares of PayPal, and I'm just kind of reporting on this in a very neutral way. So when I go into the balance sheet, actually let's go to cash flow. Let's take a look at the stock-based compensation because I always like looking at that. So you can see they're paying about a little bit over a billion in stock-based compensation. Keep in mind these numbers are in the thousands. And then we're looking at free cash flow. Free cash flow is growing, so that's one good sign. And we can see their ending cash position. It hasn't really changed a whole lot since 2020 to 2021. Oh, one more thing. Right here, you can see repurchase of capital stock. So you know they're doing buybacks of some sort. Now going into the balance sheet, just going to take a quick peek at their health. So we're going to look at their current assets and their current liabilities. So their current assets, they have quite a bit of receivables, quite a bit of cash. So they have a little bit like 50 billion in very liquid assets. And what they basically owe is around 43 billion. So they have about a little bit over a 1-to-1 ratio in current assets to current liability. Now, when we look at this ordinary share number, or the ordinary share number, we can see that this is decreasing. So you can see here in 2020 versus 2021, this number is slightly decreased. So what I want to look at is what their repurchasing program is. So to do that, we're going to look up PayPal 10K. And I'm going to go right here to this website. Now make sure that you get the most recent filing. So this 10K should be the entire year for 2021. And it should also include the most recent quarter. So we're going to click on this. You're going to click on this document right here. And as usual, I'm going to do Control F. I'm going to look up repurchase. And then I'm just going to toggle down until I see what I want to see. So just real briefly, we could see that they've been repurchasing shares here, and this is in the millions. And you could see, take this either bullishly or bearishly. They were buying shares here at 186. So the bullish way you could see this is, hey, they were buying shares at 186. The bearish way you could see this is, hey, they could have been buying shares here at 107. So what the heck are they doing? So what I'm interested in is how much is left. So here they tell us that in 2018, they authorized a repurchase program of 10 billion, but they're not really telling us how much is left. So we're going to continue scrolling. So let's see. Scroll down a little bit more. So right here. So during the year ended December 31st, 2021, they repurchased 3.4 billion common stock. And as of December 31st, 2021, approximately 5.1 billion remains. So this is a good tailwind for investors because they basically blew through half of their repurchasing program and they still have half left. So I think it's very likely that they'll probably be buying more around these levels. Now, one more thing that I wanted to look at, I wanted to look at their long-term debt. So right here, we could get a good idea of what their long-term debt obligations are. So this is in the millions. So you can see for 2022, they owe about 1.2 billion. 2023, they're going to owe about 1.2 billion again, and then 1.4 billion, 1.1 billion, 1.4, and then thereafter over 4 billion. And that's a total sum to about 11 billion right there. Now, another thing I wanted to talk about was let's look up interest rate. So in a lot of these 10Qs or 10Qs and 10Ks, companies are going to start talking about interest rate risks. So let's just look into this real quick. Let's see what risks PayPal have if interest rates are increasing. Let's just read through this. So they talk about their debt structure being fixed rate. So increase in interest rate isn't going to affect that. And we can see that future borrowings, obviously, that's going to affect. And they also talk about how interest rates may also affect customers' spending levels and willingness to pay. So right here they say higher interest rates often lead to larger payment obligations by customers of our credit products to us or our lenders under mortgage, credit card, and or other consumer or merchant loans, which may reduce our customers' ability to remain current on their obligations to us and therefore lead to increased delinquencies, charge-offs, and allowances for loans and interest receivable, which could have a adverse effect on our net income. So yeah, they talk about the interest rate here, and yeah, if you want to look more in depth into this, then just pause the video and I'll zoom into this for you. So that's basically PayPal in a nutshell. And that's just me covering the financials. I actually don't know too much about the overall business, but I am familiar with their products. And hopefully, I could do a little bit more coverage on their financials in future quarters. So, thank you very much for watching, and I hope you